Welcome to the Business Growth Spotlight, where we shine the light and talk with business leaders from all over the world who are here sharing their wisdom and expertise so we can all grow together. I'm your host, Heidi Schalk, co-founder of HLH Growth Solutions, where we help businesses grow revenue using outside-the-box visibility strategies. If you're new to the podcast, welcome. I'm excited to have you joining us. Please stay to the end because we have a special gift just for you. But without further ado, I want to introduce my guest today, Dolapo Adedayo with Trend Hijacking. So welcome, Dolapo, to the podcast.
Hi, Heidi. How are you doing today?
I'm fantastic, and I'm even better because I'm excited to chat with you and learn about, we're going to dive into some e-commerce talk today and acquisition and all those good stuff and how we merge those together. So let's just dive in. Can you share a little bit about yourself, Dolapo, Trend Hijacking, and your role within the company?
Yes, of course. First of all, thank you for that introduction. I'm really excited to be here today. So my name is Dolapo Adedayo. I'm the founder of Trend Hijacking, and we are an alternative wealth advisory that helps particularly high net worth individuals, entrepreneurs, professionals buy, scale, and exit profitable e-commerce brands. We are not a marketplace like Flipper businesses for sale. No, we are a buy-side advisory operator and also partner. We'll help you source deals for well below market value, perform forensic level due diligence, and turn them into online businesses. Turn online businesses into cash flowing and exit ready assets. Our mission is simple, and that's to make e-commerce acquisition as a core institutional grade a part of every serious investor's portfolio. And that means immediate profitability, scalable upsides, and structured and high multiple exits as well. So my journey began in 2017/2018, and when I first discovered e-commerce, not just as a business opportunity, but as a rapidly growing investment class. As I dug into more data research, I saw convincing proof global e-commerce sales that it was growing like insanely well. I think it was around like 6.8 trillion in sort of overall valuation, and that was huge for me. And this was when lots and lots of brands like the Gymshark were huge, and I saw, rather than just seeing it as a side hustle, I really focused on what one could do differently to really make this into like a consistent cash flowing business. So what I did at that point was I really started focusing on acquiring e-commerce businesses. I had a background running entirely different business, traditional business, nothing e-commerce. So getting into this space, bought my first business. I started to take lots of master classes, lots of trainings, work with lots and lots of e-commerce coaches to really understand, how to grow and exit an e-commerce business. So for me back then, all I needed to do was really grow this business. So I did the first one. I acquired my first business. That was around like 2017, 2018. I was able to really scale that, and we exited in only about 2 years after. That was in 2020, which was really interesting. So that first exit really opened me up to a whole new experience of what was possible in that space. So rather than just spending lots and lots of time building e-commerce businesses from ground up, I thought it made a lot more sense to skip that 0 to 1 journey and acquire a business that's already profitable, that already has a team in place, already has infrastructure, product market fit, all of that fully refined, and then just buy that business with a goal of scaling it to going from 1 to 5 or 1 to 10, so you could eventually exit, right? So with that growth comes a lot of potential as well, right? So we see that online businesses, especially e-commerce businesses, are the businesses that you can scale rapidly. And that's because of the fact that you could sell to, there's no limit to the number of customers you could sell to, especially because you're not limited by your geographical location. You could sell to customers within your region, you could sell internationally. So that growth potential is there compared to other traditional businesses, right? So online businesses could scale really rapidly, and the revenue could grow really aggressive as well. And I think that was what I found particularly interesting, particularly appealing about this kind of businesses, right? So I realized many digital asset returns were certainly outperforming this available in traditional investments. So back then, right before I acquired this first business, I obviously had stocks, I had crypto, and the returns, crypto, of course, a lot of the volatility, but because I had a lot more control and I was essentially in charge of figuring out ways to grow this business, I found it a lot more appealing just for the control sake, right? So, and after that first acquisition, and I was able to exit, I got into buying more businesses, and because all throughout that journey, I would create lots of content online, Instagram and social media. I started to attract lots of investors, that were also interested, and that was exactly how what gave back to Trend Hijacking, right? And our goal then became to build a firm that could help other people, other investors, reliably access the opportunity in the market. And e-commerce is new to a lot of people. There's so many moving parts. So I brought together a team of high caliber team, not just M&A advisors or brokers, but investment analysis, asset managers, growth strategies, a deal sourcing specialist to help us support businesses, support deals that we could acquire for well below market value. And these are businesses that are not already in market, so off market businesses that we could acquire for below what you would get one for if you were to trade with a traditional M&A firm or a traditional broker that would want you to pay insane multiples, right? So the real value comes from being able to support the right business that is not on a public marketplace that you could acquire for well below market value. Why? Because most of these people don't even know they could sell the businesses. Right? So when they see opportunity to sell, it seems like a lot of money to them. But coming from where we're coming from, it is really a good deal. And so our goal with Trend Hijacking as a wealth advisory firm is to essentially help investors buy, scale, and exit digital assets. And since my first acquisition and growth and exit, we've enabled over 491 investors at this point to take part in successful e-commerce acquisitions and exits, turning many just online businesses into very serious alternative assets in diversified portfolios, which is essentially our goal.
Amazing. Thank you for sharing all of that, because it gives us a lot of information on your background. And I love how how you've not only worked your business, but you actually exited, where a lot of entrepreneurs don't really get to that point. They either close down before it or they're working until they're just done. So I love that you were able to do that. And you kind of pivoted your business, right? You were in e-commerce and now you've learned, okay, there's a different way of doing it. And how do I help businesses and entrepreneurs in a different way? And I love that you pivoted, because I think for me personally in our business, we've pivoted a number of times, and we're adding on some new products. So we're kind of doing another little pivot, which is exciting. And I think it's important as entrepreneurs and as founders, CEOs, that we learn that, or we're open to the possibility that as where we start is not necessarily where we're going to finish or even be in the next year, 2 years, 3 years. I've talked with other companies on this podcast, and they've learned that how they came into their business, they needed to do a slight pivot, and not a big one. They're still doing what they came in to do, but it's a slight pivot, maybe with a new product or a new service that they're offering, because they found out that that's what the market needs. So I love how you shared your background in that, because I think that's a big gold boulder, I would say gold nugget, but gold boulder into us as CEOs, founders, people wanting either launching businesses or in the growth phase, to be open to all possibilities in all avenues. So thank you.
Yeah, absolutely. Absolutely. I was speaking to my mentor a couple of days ago, and was talking about how growing a business, especially if you have an ultimate target in mind. If your journey is to go from east to west, sometimes you might have to go south or north before you could get to west, right? So lots and lots of iterations that needs to be done. I think if you, as a founder, you just need to spend a lot of time customer facing, spending a lot of time understanding what your customers want. And the more time that you spend with them, the better understanding that you have and the better products that you could create. And I think that's what's really helped us to be able to get to the point now where one, we have a lot of infrastructures in place that helps us particularly identify the right business, which is the really important part. Most marketplaces like Flipper, like Empire Flipper, like it's really hard to come by really good businesses. And sometimes the good businesses never get to those public marketplaces, right? Because if your business is doing so well, then why would you want to sell? Right. So the question now is how can we identify businesses that are not in market, something that we could find off market, and still get the sellers interested in selling, right? So again, it boils down to just making lots of iteration, listening to what your customers want. And if you do that and make enough iterations, you're able to get from that point A to point B and ultimately achieve your goals.
So Dolapo, when many people think of e-commerce, they imagine launching a brand or going viral, but you position e-commerce as an asset class. So how do you define an e-commerce business as a predictable asset class? And what are the key characteristics you look for in a business that you'd acquire?
That's a very good question. So most asset class, when you say asset classes, a lot of people think stock, real estate, private equity perhaps, and they require a time before they produce meaningful cash flow. E-commerce acquisitions are different, and when done, especially when done correctly, which is really important, an investor could acquire a business that's already producing revenue and profit on day one. And we're in a position now where we work with a lot of different calibers of investors. And there are people that get into this that still have the operator mindsets. They're just the founders, they want to buy businesses in the cater to care range, and they want to be involved. In fact, maybe they want to quit the job and they just want to be actively involved. This kind of people, they want great returns, right? But equally, other calibers of investors that get into this thinking of this thing as an asset class. They don't want to be involved. They don't want to be emotionally attached to the business they acquire. They're just looking strictly at the financials. They're strictly looking at the numbers and what the numbers are saying. Right. And I think that really is the right way to go about it. If you're looking to put your funds into allocate funds into stock, for example, you're spending a lot of time researching that company, you're spending a lot of time researching, the industry, growth potentials, if it's a growing vertical or if it's going to die, right? So, and we believe that is the right way to approach e-commerce. Of course, there's a bit of not everybody can afford to buy a business, but especially most of these deals, they're usually cash buys. They would want to sell to people that have got actual cash, to buy these businesses, right? So it is really important that when you look at these deals, there's a lot of different things that we look out for, right? So, and the way that we present e-commerce businesses, one as the yield generating asset that could produce more than 20 to 35% net margins, on a monthly basis. Most of these businesses, especially if you go on the Trend Hijacking website, for example, we've got quite a lot of deals on there, and you would find businesses selling from anywhere between 100K and 200K. They're actively generating an average of about 10,000 to 20,000 a month. That is something that you would not get if you to put your money in the traditional asset class. Is it going to be risky? Absolutely. This is not easy, right? We're not saying this is easy and everyone to just go ahead and put their funds into buying an e-commerce business. However, when done right, we believe e-commerce could produce the best yields for any investor. And this is what turns an online brand into an investor version of a digital rental property, except that one, it has higher margins, there's more lever to improve performance, there's global scalability, and we use this cash flow first framing to position e-commerce as a productive asset. and not as a speculative venture. And I think the other thing that's really important as well, with e-commerce acquisitions, you could create instant equity through below market acquisition, right? So the first thing that I mentioned here is e-commerce cash flow and assets with immediate yields. You're buying a business right now, you should expect from day one to essentially start making profit, right? Because these businesses are already profitable. You're just buying it, and from day one, you're able to start yielding a profit. And the number two thing I think is really important here is instant equity if you're able to acquire for well below market value, right? So if you're to work with traditional M&A brokers and you want to buy a business that's generating an average of 100,000 annually in earnings, you would be expected to pay anywhere between 3 to 4x on earnings. So you're buying a business generating 100K a year in profit, you should be paying 300 to 400,000. That is a lot of money. And what that means is it will take you 3 to 4 years to make your money back. We don't work like that, right? Our model optimizes buying for well below market value, right? And what that means, in our experience for businesses, especially at that size, we want to buy from anywhere between 0.8x to 1.5x annual profit. And what that means is the payback period for our investor is much faster. So if you're able to acquire these businesses for well below market value, one, the risk exposure is reduced significantly, and two, payback period is faster. Three, ROI wise, you'll gain a lot more because the moment you're able to recoup your original investment, what comes after is just additional profit, right? So this is really key to position e-commerce as a serious investment, being able to pay so little or at least below market value for the business that you acquire. So when you acquire below market value, you generate that instant equity. And it's very similar to buying real estate under market value. Say there's a crash in the market, and you're able to acquire a real estate property for well below market value, right? Or acquiring distressed but valuable assets in private equity, or even purchasing undervalued public companies. So this is very similar, but for investors, this become a built-in safety net, cushion, just that instant equity cushion for market fluctuations. Because as similar to any other business, there would be volatility, right? Especially if you're acquiring a business that is very seasonal, right? And you only perform, say, during Q4, during the December months, October, November, December, right? So it is important, and this is what we do differently. If we're able to acquire businesses for well below market value, it immediately gives investor that equity cushion from day one, which is really important. Why? Because it protects them. It gives them the risk, it limits the risk exposure, if that makes sense, right? So this essentially positions e-commerce acquisition as a value investing strategy and not just retail gamble. And I think that the third thing that's really important here is e-commerce brands have private equity style upsides. And this is what I mean, without the PE restrictions, right? We frame e-commerce acquisition as the smaller or faster and more flexible siblings to say private equity, because it shares all of the core principles. One is you can leverage existing cash flow in the business. These are businesses that are already profitable and generating consistent revenue. And two, you could optimize operation. Now with AI, you could optimize customer service, marketing, operations, fulfillment. All of these kind of things could be optimized using leveraging AI. You could expand margin, trying to identify things that you could do differently to increase profitability, to get better margins. You could acquire more customers, you could scale the brand globally, and ultimately you could exit much higher multiple, right? So, but unlike private equity, I think these deals are much smaller. We're not buying a business for 100 million, no. And equally more accessible. Operations can be transformed in weeks and not years because these are much smaller businesses, and exits can occur between 1 to 3 years instead of 5 to 10 years when it comes to private equity. So in other words, e-commerce is private equity for modern investors, but without a bureaucracy, without a long horizons and all that institutional complexity. Lastly, I think what makes e-commerce, or why we could consider e-commerce as an investment vehicle, is the fact that there's multiple growth levers that create compounding value for stakeholders, for the owner, right? And you could position an e-commerce brand as an investment vehicle, and you could essentially do that through a lot of different things, from pricing optimization, increasing cost average order value and lifetime value for your customers, funnel optimization, optimizing marketing, repositioning the brand as a as a influencer, a backed brand. There's a lot of things that you could do to optimize logistic as well, omni-channel expansion, market expansion, SKU rationalization. You could leverage paid media, you can leverage SMS and email marketing. So there's quite a lot of things that one could do to create more compounding value for these businesses. So the approach that we take is we target businesses that we could acquire. We buy this business for well below market value. We identify things that we could do differently to really create a lot more value in a short period of time. What that means occasionally is figuring out ways to aggressively grow revenue, grow earnings, grow profitability, and within 1 to 3 years, eventually exit that brand, right? So, and I think with e-commerce businesses as well, they've got high liquidity. In as much as you have a business that's consistent, it's performing really well with efficient operations, it's very highly liquid in the sense that you could sell at any point in time. It's a huge demand, in the market for people actively looking for e-commerce businesses, with streamlined operation, really profitable brands, and also have that unique moats that you won't find anywhere else. So I believe that essentially covers the things that we do differently, and now we help e-commerce acquisitions be positioned as investment vehicles. I hope that answers your question. It's a little bit long, but yeah.
No, it's great. Thank you. So I'm curious, Dolapo, for our listeners who are growth consultants or B2B service firms, your model may feel quite different. So what lessons from your e-commerce acquisition and scale model can growth-oriented businesses adopt when thinking about owning rather than serving?
Yes, that's a very good question. So I took this masterclass recently by a guy called Roland Fraser. I don't know if you know who that is. And he's one of the acquisition gurus when it comes to business acquisitions. They're primarily focused on traditional businesses and not particularly e-commerce. And there's this thing called consulting by equity that they teach. And what that means is, rather than primarily focusing on charging a fee for what you do, you consider taking equity to produce value, right? And for service providers, mostly we're putting so much effort into helping other businesses grow that we get paid stipends, to do the work and really help them grow, right? So I think what one could do differently, and this is what we're doing differently, most of the e-commerce businesses that we acquire on people's behalf, because we're putting so much upfront, we're saving them so much value. So much in value just from negotiation, helping them acquire for well below market value. Whatever they pay us in fees is essentially becomes nothing, right? Because we're saving them so much in value. So because a lot of people see that, they decide to partner with us. And when I say partner with us, it means we manage these e-commerce businesses on the behalf and grow it. And what that means as well is we get equity. Of course, not every single client that we work with wants that, but for the investors that only consider these as investment vehicles, they don't want to be actively involved in the day-to-day running of the business. It's a win-win for them because they give us equity, we upskin it again, and what that means is we put in so much effort into ensuring the business could grow. It's a win-win for us. We don't charge retainers. We only get paid a share of the profit on a monthly basis, right? So we're happy, win-win for everybody, right? So, and I think this is something that a lot of service providers could consider, especially with AI, with the advent of AI right now. It's important that one become owners and not just service providers, right? So if you're to find clients or clients that might be open to ideas of you owning a percentage of the business, especially if you could provide solutions without things that you could do pretty easily, but would cost them a lot of money. I think a lot of people would absolutely be open to such ideas, right? So I certainly recommend that masterclass is Consulting by Equity by Roland Fraser. I think it's a really interesting masterclass that most service providers will find useful because it helps you think like an owner and become an owner rather than just service providers that just get paid retainers, if that makes sense.
Yeah, absolutely. So you mentioned earlier how you were basically how people found you when you were moving into this space or prior to it. Can you share with us, how are you doing it now? What are you doing as far as, I'm sure you're not the only company doing what you do. So how are you getting out there and being seen by your ideal clients? What are you doing that's been working well? And on the flip side, Dolapo, what are some things that you have done or tried that you thought would work, or you had positive thoughts around it, but it just didn't do as maybe didn't pan out as well as you had hoped?
Really good question. So I think one thing that we do very differently compared to most of our competitors is, like I mentioned earlier during this podcast, I think as a founder, you need to spend a lot of time just understanding your customers, understanding where they reside and where they reside on the internet. And if you do understand that, you're able to fully understand how to target them and how to speak to them and where to find them. So for us, we do not run any right now. We do not run any paid ads. And while a lot of founders would look at that and think, no, that's insane, that's impossible. And we spend a lot of time running native. I don't know if you know what native ads are. So for what we do, especially because of the kind of audience that we target very high net worth individuals that can afford to spend 100,000, 200, 300,000, up to 1 million on acquiring a profitable e-commerce business. They're not just people that you just find everywhere on the internet, right? So what we try to do is we run native ads. Native ads are ads that you run on platforms where people already go to. And this is what I mean. So if you are looking to buy an e-commerce business, or you're already in market searching to buy a business, you would go on platforms where people go to buy businesses. And our goal is to run ads that show up on those kind of platforms. So we are showing up essentially where they could find us or where we could seem the most relevant to them, which is really interesting. In our market, especially because of how high net worth the kind of audience that we target are, it's very difficult to run generic ads and just target everybody. So rather, it is really important for us to be laser focused in our targeting. So right now, we still target people that are product aware, they're solution aware, and they're just looking for the right guidance or the right help or at least the right business. And that's exactly where they find us. And we spend a lot of time as well we used to spend a lot of time on SEO. And right now we spend a lot of time on AI optimized SEO. And what that means is getting LLMs like ChatGPT, like Google Gemini to refer us, to get content from our website. So we write a lot of content, we produce a lot of content that are really optimized for these LLMs to identify us, to refer us, to suggest us sometimes. And I think that those are really important things to be doing right now for most founders that rely on, getting customers, especially during the research phase. That is one. And two, in terms of things that we've tried that failed horribly. So we started off with acquiring e-commerce businesses, and we realized that there's a segment of the market that do not have access to the kind of capital that's needed to acquire this sized e-commerce businesses. And before, maybe we could help people start e-commerce businesses from ground up. So that was a proposition. So we created this product. I call it automation program. We still offer it right now. And we started working with people that wanted to build e-commerce businesses from ground up. And we were doing all of the work, and they basically did nothing. They just funded the whole project. And what we realized from that is, one, people have high expectations of what the results should look like. especially from the very beginning. Starting a business is really hard, and there's a reason 9 out of every 10 businesses fail, right? So it is really hard, really challenging to start a business from ground up. And this is why our focus primarily has always been to skip the 0 to 1 and start from one, buy already profitable businesses rather than starting a business from ground up. So that is something that we tried out, and the success rate was pretty decent. I'd say 35% of people, of clients that actually came in through that succeeded within, I'd say, the first 4 to 5 months. And that's because it is really tough. It is really hard to start a business from ground up, right? So we still offer that program, but one of the things that we do right now is to help them understand the challenges and risk upfront before they commit to that kind of journey, because it is hard. And you need to be really patient, to get on this journey with us if you want the automation program, which is where we help you build an e-commerce business from ground up. So that is something that we've tried out in the past that has not been that successful for us. However, for people that are patient enough, it's eventually you get to figure it out, because sometimes running a business and making a business successful, it takes a lot of iterations. It takes just being the last person standing. And if you're willing to commit to that kind of journey, you're willing to persevere through that, eventually it would work. Eventually you're able to build a business that's highly successful. We've got clients in that particular program right now, it's Q4, that are doing incredibly well in terms of the earnings from the stores, in terms of performance from the stores. But they didn't start out with, from 1 to 1 and being successful. It probably took them 4 months, 5 months, 6 months to get to the stage, right? So one of the things that we do really well right now, especially when we do attract individuals that want to start a business from ground up and want to work with us, is we're very upfront with the expectations. This will take a lot of time, and you need to be willing to persevere and commit and endure those hard times, because they will come. And that's the same thing that every founder faces, just really figuring things out, that stage of not knowing what's going to work until you do figure it out. And that's something that we try to communicate to them from the get-go.
Yeah, I love that you showed that, building a business isn't easy. It's hard work. So if you can buy something that's already profitable, why not, right? Skip that 0 and move straight to 1. For those of you that can do that, great option. And like you said, not everybody is in a position to buy a business, but definitely it's a great option if you can, because that learning curve is big. And no matter what, success leaves clues. So whether you're just starting one or you're buying one that's already profitable, success leaves clues. Make sure that you are learning or researching or getting mentorship from people who have succeeded, who has done it. Dolapo's done it. So you want to make sure that you're surrounding yourself with in asking questions and getting mentoring and all of that from the people who have done it. That's important. You're more likely to be successful if you're learning from those who are successful. Lone wolfing, it doesn't work. I'm trying to figure this out on your own. Whether you're buying a business that's already successful and if you don't know what you're doing, you definitely need to have somebody in there that does. So you're learning from them. And Dolapo is a great resource for that. So Dolapo, before we wrap up and I ask you how to share how people can get to reach out to you and get to connect with you, what are your big goals? What's next for Trend Hijacking, like say over the next 12 months?
Yeah, that's a very good question. Before I talk about our mission, our vision, I like to talk about our current mission. And our mission right now is to empower investors to build long-term wealth by acquiring, scaling, and exit high-performing e-commerce assets. And from deal sourcing, due diligence to portfolio management, we bring that institutional grade rigor to every stage of that acquisition journey. So you could diversify with confidence and a lot of clarity. And we do that by strategically identifying market opportunities and applying growth strategies that we've tested lots and lots of times, all through over 491 acquisitions that we've done. We transform digital businesses, e-commerce businesses, into wealth generating assets. And our focus it's just not short-term wins, but risk-adjusted returns, portfolio diversification, and also a profitable exit. Our goal is to redefine a wealth management by making digital business acquisition as structured, accessible, and even more rewarding than traditional asset classes. And in terms of our vision, long-term vision, we are redefining the future of alternative wealth, where investors don't just hold traditional assets, but they hold high-performing digital businesses. Our vision is to position e-commerce as a recognized institutional-grade asset class, delivering risk-adjusted returns, diversification, and liquidity events that rivals private equity, much like leading investment firms that curate portfolios of real estate, equities. We create a pipeline of profitable e-commerce businesses, digital assets, each representing innovation, scalability, and also long-term value creation, because ultimately that's the goal. Our partners will participate in this digital economy. AI, everything is digital right now. We want our partners to participate in the digital economy and shape it. Right? And together, we can build a legacy of sustainable wealth and setting new standards, especially when it comes to alternative wealth investments worldwide. So that is the goal. And within the next 12 months, our goal again is to, one, be able to provide a lot more education to investors looking for alternative investment routes. That lots and lots of, and not a lot of people is conversant with e-commerce as a whole, and the scalability, how huge the ROI could be when done right, and also hands off it could be. A lot of investors don't want to actively get involved, and this is why Trend Hijacking exists, to support investors like that, so we could do the work while you keep the returns. So ultimately, in terms of to round this all up, I like to say the future of acquisition isn't just about finding the next unicorn or finding the next AI boom or the next Nvidia. It's about buying predictable cash flowing assets and going them in the markets and essentially applying operational improvements that could compound them over time. E-commerce offers that something that's rare in today's market, and that's the visibility, the control, the scalability, and also the power to essentially transform these brands. And we've seen brands that were acquired for about 100K range, sold for up to $1 million in a short period of time. Of course, that is not typical, but if done right, this could happen, right? So that is our long-term vision, to essentially educate people more on potentials, what could be. Of course, the risk as well. It's not just easy to get into. With any investment like this, there's always risk. And our goal is to educate people, help them understand the potentials, the risk, and essentially help them get into this in a well-controlled manner.
If I could give you a magic wand and you can wave it over one challenge issue that you're having right now, as far as getting to your goals, what would that issue, and you could go poof, take it away right now and wave it over that. What would it be? What would that challenge or issue be, and why?
That's a very good question. I'd say it would be accessing more deals, because there's a lot of investors that want to invest in e-commerce. And the real challenge is finding the right businesses for them, right? So there's a lot of things that we're doing. We're sending over 100,000 emails on a monthly basis to existing e-commerce owners, cold emails, to get them interested in selling. The most difficult challenge that we're facing right now is finding the right deals and getting people interested in selling. And if we could, the more deals like that we could get access to, the better for us. Right now, we have more than 2,000 plus e-commerce businesses in our network, people that want to sell, mostly off market. But again, we can't advise investors to buy every single business. No, because not every single business would provide them with that, what they're looking for, which is that risk-adjusted returns and that stability. Some investors want a cash cow, right? So ultimately for us, it's being able to access as many deals as possible. And maybe we might need to start a marketplace at some point and become competition to the likes of Flipper. But right now, we're not a marketplace. We try to find deals off market. We reach out to as many e-commerce sellers as possible to get really good deals for our capital partners. And that would be what we'd like to fix aggressively.
That's awesome. Well, thank you for sharing all of that. Dolapo, how can people connect with you and reach out to you?
Yes, you could reach out to me on LinkedIn, Dolapo Adedayo, just search Dolapo Adedayo on LinkedIn. And you could also just come to the Trend Hijacking website. It's Trend Hijacking, TR.
Yeah, perfect. So if you're watching us on YouTube, thank you. We're grateful you're here. Happy to have you here with Dolapo and I. Please leave him a message below. Let him know you were here and you heard him here. Please share this interview and Dolapo with anyone that you believe is looking for, whether they're looking to sell or looking to invest. Let them know about this interview and this conversation, and please let them know Dolapo exists and Trend Hijacking is here to help them. And you can go to Trend Hijacking. We'll have all of Dolapo's links inside of the show notes, so you can grab them there, including his how to find him on LinkedIn as well as the website. If you're listening to us on your favorite podcast platform, thank you. We're grateful for you as well. If you loved what you heard today, please hit the 5-star review there or comment a review if you'd like. That helps us push this podcast out to more people, as well as Dolapo and Trend Hijacking. We're super grateful for that. Oh, I promised y'all a gift, so here it is. If you're looking to grow your visibility and you feel like you've been doing things, Dolapo's been sharing what's been working for him, the things he's tried, the challenges he's had. If you're feeling like you're throwing spaghetti at the wall and trying different things, go ahead and download our free Spotlight to Scale blueprint. You can go to spotlighttoscale.com/blueprint to grab that. It'll give you some outside the box ways to grow your visibility and share your message and what you do with more people. Dolapo, thank you for being here today. Before we wrap, is there anything that I didn't get to ask you or we didn't talk about that you have any last words or want to share on?
So, yes, it's easy to think with everything that we've spoken about today that it is pretty guaranteed, that results are pretty guaranteed. And I just like to say, no ethical advisor guarantee returns. And what we guarantee is institutional vigor, forensic due diligence, below market value acquisition, purchase discipline, and proven growth framework. And these are what really create defensible paths to ROI targets that we discuss. Usually in break-evens of anywhere between 8 months to 16 months on average, and exits for 2 to 3x, or even up to 5x range. So I think it's really important that I mention that there's no guarantees here. It's always risky, and what we do is that institutional level vigor that we bring to acquisition, growth, and exits.
I love that, because there's no guarantees in life, right? Dolapo, we're not even guaranteed tomorrow. There's no guarantee tomorrow's here. So I love that you shared that, because it's true. Dolapo can help you in certain areas navigate the best decisions, he can do the research for you, but at the end of the day, the success comes down to you. It goes back to that old saying, if it's to be, it's up to me, right? Yeah.
Exactly.
So thank you, Dolapo, for being here with us today. Thank you all for listening to Dolapo and I. Please reach out to him. He's pretty awesome, as you can tell. So please connect with him. And I look forward to seeing you on the next episode of the Business Growth Spotlight.